kind of the dollar stand.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade today. We'll also get you expert voices to find out where exactly are opportunities emerging for you as an equity investor. So first up, a quick check as to how the benchmark indices, the Nifty and the Sensex, are moving in trade today. Remember, after touching the peak this week, we've seen the markets have seen some profit booking taking place, and that is getting extended for the second trading session in a row today. We've seen that the Nifty is actually hovering at around 18,729. So they've not just given up the 18,850 odd mark, they've slipped below the 18,800 right from yesterday's trading action and are remaining in that very narrow band right now. 0.2% of a downtick for this one. The Sensex also down by 70 points today at 63,169, just about flat with a negative bias in trade today. Let's look at whether the broader markets are showing any kind of positive strength. No, they're not. In fact, they are actually weaker in trading session today. 0.8% of a decline for the mid-cap 100 index. So that's taking a sharper beating. Remember, the mid and the small caps were the ones who led the rally in the last few trading sessions when the markets bounced back. So we did see some of these, pockets really gaining some strength. And these are the ones that are also facing some heavy profit booking now. Small cap 100 index also down by 0.6% odd. Let's also look at the other sectoral indices to find out whether the picture is similar over there too. Nifty Bank, amid a lot of choppiness, is hovering just above the flat line at 0.07% kind of gains that are being seen here. What's giving some kind of a move is the private banking space. That's up by just 0.1%. But rest of the sectors are all down in the red. Which is the sector that's being hit the most? It's the metals pack that's down by 1.7% today. Consumer durables 1.5% down. Media stocks also seeing some profits being taken off the table. You're also seeing cuts coming in as far as the IT pack, the FMCG, and even the pharma pack is concerned. So you're seeing the defensives under pressure. The PSU banks are down by 0.5% as well. Auto stocks in the slower lane down by 0.7%. So it's a broad-based sell-off that you're witnessing in the markets in today's trading action. Let's also take a look at how the sectoral gainers and losers are concerned as far as the index gainers and losers are concerned on the Nifty. If you do see the pressure coming in on the Nifty back currently in today's trading action, it's from the Adani Group stocks. In fact, all the 10 stocks of the Adani Group have actually come under pressure. So severe fall being seen on Adani Enterprises, that's down by 5%, Adani Ports down by 3.5%. We're seeing, stocks like even Hindalco, BPCL and Tata Motors dragging the street sentiments by 1.5 or 2% down in trade. On the flip side, what's still holding up in an otherwise muted market today is a stock like Bharti Airtel. That's the top gainer in today's trade, 2% up in trade. IndusInd Bank, NTPC, Dr. Reddy's and Asian Paints, the other gainers at this point in time, about 1.5 to 2% up in trade. So these are the kind of gainers that you're looking at. The HDFC pack also looking brighter, about 1% up for HDFC Bank today. HCL Technologies and Bajaj Auto, the other gainers at this point in time. But time to welcome our guest on the show. Mr. Rajesh Palvia joins in. He's the SVP at Head of Technical Research at Axis Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, we did see that peak coming in for the Sensex in this week. But after that, it's been kind of profit booking that's again taking place. 5 clear attempts by the Nifty to reach the all-time high levels, but it has failed to reach that level too. Where are we headed in terms of the market? How does the setup look to you?
Yeah, good afternoon, Sakshi. So yes, market is almost trading near to all-time high trajectory, but Nifty missed that opportunity to scale up to the new all-time high by almost 1 point. But looking at the overall setup, we still have a bullish view on the market as overall data setup on the derivative front. It's clearly indicates that base has already shifted higher and a lot of put writing activity which is already intact at 18,700, 18,600 strike, which clearly indicates that for this monthly expiry, we are going to have good support area at 18,600, 700 zone. and this kind of minor dip, or what we can say like minor profit booking, is an opportunity again to buy stocks, as we are entering to the now expiry week for this monthly series. So some profit taking, some position shifting is going to happen. And looking at the overall setup, we do believe that once Nifty manages to again cross above 18,850, then this really can extend to 19,000, in the continuation of this uptrend. So there is
Hmm.
no such worry in terms of trend of market. Both the indices like Bank Nifty is also looking attractive, as Bank Nifty is clearly holding its put base support area of 43,400, 43,200, which is very well intact in the market in the decline which we have seen in last couple of trading session.
Hmm.
Bank Nifty, once Bank Nifty manages to cross over 43,800, then we can see a good amount of short covering action also to play a role in this upward momentum. So 43,800 is the level where we can expect some short covering to come in the Bank Nifty, and then possibly Bank Nifty can scale up to level of 44,200, 300 in the continuation of this trend. So buy on dip should be your strategy, as such trend is intact on the bullish side only.
Okay, understood that. Well, Rajesh, some of the pockets are, taking our attention today. So let's focus on those particular stocks too, and then we can come up to, to discuss which are the other themes that one should look at. Adani Group stocks, for example, are all in the down, space today. They plunged up to 10% odd in today's trading session. Of course, there's news reports again buzzing, which are leading to this kind of negative flows that we are seeing. First up, there's a report that suggests that in the US, they've been, the agencies are now looking at a regulatory scrutiny on the kind of representations that have been made by the Adani Group to American investors. And that's after the Hindenburg Research scathing report that really led to a whole lot of losses for in the first half of this year for the Adani Group. So, Adani Enterprises intraday fell by 10%. Adani Ports, Power, Transmission, they both all declined by about 5% odd. Total Gas, Energy, and even Wilmar have plunged about 3% odd as well in today's trading action. How are you looking at this fresh bout of sell-off in the Adani Group? Is this something that the investors should again be wary of? Because most of the investors, after the recent report had come out from the Supreme Court and the recent findings of the committee back home in India, most of the investors felt that perhaps the worst is behind us for the Adani Group. But now these fresh reports have come up. How should investors be now trading these stocks?
See, post this Hindenburg report in month of Feb, still Adani Group stocks not able to gain the confidence of investor or trader is still. Uh, though we have seen a recovery in most of the stocks from that February low or March low, but still that is not sufficient to take out all these stocks from their bearish zone.
Mm-hmm.
So if we analyze on the long-term perspective, still stocks are in negative territory. Yes, some recovery has taken place from the lows which we have seen in the month of Feb, but still the confidence is not there. Buy and hold strategy is not working in Adani Group stock, because a lot of news flow is coming in the whole group. Uh, so that is giving us some bit of shaky behavior in these kind of Adani Group stocks. So most of the stocks are now trying to get supply pressure from its 100-day, 200-day moving average zone. So that is likely to act as a resistance or supply zone for most of the stocks. If we go with the behavior of Adani Port, Adani Enterprise, even Ambuja Cement, all stocks are struggling to cross their long-term moving averages. So we expect these volatility is likely to remain for Adani Group stocks till the all these news flows not settle down at a certain point.
Hmm.
Till this news flow keeps on coming, these kind of volatility is going to remain in the most of the Adani Group stock. So those who are high risk taker, they can play in these stocks, and those who want to do very safe kind of investment or trading, they should avoid Adani Group stock at this juncture also, because the high beta stocks very sensitive in nature, and everybody is trying to figure out what kind of the outcome or what how Adani Group is going to counter all these new reports which are coming day by day for this group. So I think a high risk trader can only try to take some bets on the Adani Group stocks, but for a retail investor they should keep themselves stay away from these kind of stocks because volatility is very high in all stocks.
Okay, understood that. Another stock that's coming on, my screen is Eros International. Now the shares have hit 20% lower circuit in today's trading action, and this is after SEBI, the market regulator, has barred the group companies and MD to participate in the markets going forward from here. Remember, this is an interim order from the Indian market regulator, which has said that it has found evidence that the books of accounts of the company were overstated and do not present a true and fair picture of the financial health of the company. And in its response to the SEBI order, Eros International has said that it is in the process of seeking legal advice in the matter and will take appropriate actions as advised. But as a reaction to this news, the stock in fact plunged about 18-20% or to just about 21.60 rupees. So 18% still down in trade today. The selling action was also accompanied by high volumes as more than about 70 lakh shares exchanged hands on both the exchanges BSE and the NSE. Remember, we've seen that the stock has also declined about 3%. In this 12-month period versus Sensex rise of a 21%. On a year-to-date basis, the stock is down about 22% as well. And with this fresh news flow coming in, the definitely stock is definitely taking a beating right here. Mr. Palbia, what about you? How do you really think, perceive this news flow coming in for Eros Media, and what does it mean for all the investors holding the stock in their portfolios?
So, Sakshi, we don't cover this EROS in our active research stocks
Okay.
list. But
Okay.
then, as market is trading near to all-time high, and so magnitude is always high whenever you get any kind of positive or negative news for any of the company. So this
Mm-hmm.
kind of reaction is very well anticipated by the market because there is allegation by and some SEBI report has already out, so these kind of sell-off is very much expected in the stock. But looking at the now technicals, stock is almost now approaching to its previous swing low of March. And I think if it stocks breaks below 20 level, then possibly this sell-off can continue further higher, further lower towards 15 level also. So I think one should avoid these kind of stock at this moment because still till the clarity is not there, I think one should avoid these kind of stock because
Okay.
as if we look at the overall setup for the stock, long term, medium term, all across all time frame, stock is in bearish zone only, and sell on rise is the strategy only for these kind of stock.
Understood that. Let's also focus on some of the stocks where brokerage houses have given their reports today. Bajaj Auto, for example, is in focus as JP Morgan has given an overweight rating with 5400 kind of a target price for the stock, and have said that this stock remains one of the preferred picks for them in the Indian auto space. Half odd percent of a rise for Bajaj Auto shares today, and there's a considerable upside from the current levels that they have expected. Apart from this, Tata Motors is again with a stock where Kotak Institutional Equities has turned bullish. It has given a target of 530 rupees on this stock at this point in time on Tata Motors too. In fact, this is a target which is lower than the current market price, and therefore you are seeing 1.5% decline coming in. A kind of a reduced rating now coming in from Kotak Institutional Equities. So they have believed that perhaps the move is now done and priced into the stocks that we've been seeing in the stock for off late as well. So two different kind of target prices and brokerage reports on two leading players of the auto industry. Mr. Palbia, how do you really perceive? One is a two-wheeler and one is a four-wheeler.
So we have seen most of the auto stocks have done well in last couple of months, and still, if we analyze the long-term setup, most of the automobile stock, as we talked about, Bajaj Auto and Tata Motor, both stocks are bullish on the long-term setup. So some corrective move is happening in both the stocks. Bajaj Auto has corrected significantly from its recent high of 4,800 kind of level. But if we analyze the near-term, short-term, as well as medium-term setup, this corrective move or the profit booking which is happening is an opportunity again to buy this stock in the decline, because overall setup and outlook for automobile sector is on the bullish side, and we believe that if you get any opportunity to buy this stock near 45 50 4500 level is a good level to again buy this stock in this decline. Keep your stop losses at around 4400, and once the stock again manages to cross above 4740 level, then again stock will resume its uptrend, and then possibly this stock can have a potential to move further higher towards 5000 5000 plus level also. Tata Motor is also getting some supply pressure since last 2 3 trading session, and now stock is approaching to its 20-day moving average, which is almost near to 555 zone. So if stocks breaks below 555, then some more profit taking we can see in the near term, and possibly stock can correct towards 535 20 zone, which is again a good level to buy this stock in this decline, because overall setup for Tata Motor is also on the bullish side for long-term setup. And we do believe that, once the stock again, crosses above 585 zone, then this stock can scale up further higher towards 640, 650 on the positional basis. So both stocks are looking attractive. One can use this decline as a buying opportunity in both the stocks. So wait for another 2-3% kind of correction, and then one can start accumulating these two stocks.
Okay, understood that. Well, thank you so much, Mr. Palvia, for being with us on the show and discussing all these stocks and the kind of strategies that you've recommended for all our viewers. Many thanks for that. The markets are still down in trade, although they are pulling up from the day's low point, but about 31 points of a decline for the Nifty even now, 18,738. The Sensex is down by 30 odd points at 63,208 odd levels, and that's a flat with a negative bias that you can see the benchmark indices now trading at. We'll have to keep an eye out on whether the second half of trading action is where we will see some pullback from these kind of low levels, and that could mean some kind of positive trend that could also follow in the next week of trading action, which will be a truncated week again. So that is something that you should definitely keep an eye out on. And with that, we wrap up this special edition, but do stay tuned on to Business Today TV for a whole lot more coming up right from the world of business, and of course the event that will unfold from the top B schools right here on Business Today TV.
I understand it's been busy days for you, that interactions have come.